Hi, everyone. Good evening. Welcome to Fintech Summer Sessions 23. We are now on week 9 out of 10, so the final stretch for the Fintech Summer Sessions 23. And we're really pleased this week to have to talk about blockchain. So last week, Athena from Settlement talked about introduction to blockchain in financial services. This week, we're deep diving into blockchain. Now that you all have a good understanding about blockchain, we're now going to be talking about applications of blockchain in financial services. And we're really pleased to have Nandan Joshi with us from Settlement. Nandan is actually currently in Japan, where it's close to 1 o'clock in the morning. So we're really pleased, Nandan, and he couldn't stay away. He wanted to present to us today. So I'm really pleased, Nandan, that you stayed up to join us. And thank you so much for being here with us. Thank you everyone again for joining. If you have any questions, please do write them in the Q&A box, and we'll try and go through as many as we can. Just so you know, next week is our final session, is week 10, but it's happening on the Wednesday. Because we have Seamless on Monday and Tuesday, we'll be moving the session to Wednesday. So we will send a message in the Telegram group so you're aware, but just wanted to flag that up as well. But for now, without further ado, I'd like to hand over to Nandan.
Thank you. Thank you very much, Sagar, for the kind introduction. Good evening, everyone. And it's actually good early morning from Tokyo, Japan. So I'm right at the center of Tokyo. It's called Roppongi. It's a buzzing place. I mean, it doesn't look like a midnight here. It's streets are full of people outside. But Tokyo, the city never sleeps, right? So nice to have you having me here. So I'm just excited to talk, have I would say like not just a presentation, because it will be a kind of interactive in the sense, I will ask you a couple of questions, but you feel free to ask me any questions you have about the topic. So last week, my colleague, Athena, she covered some topics about details about blockchain. Today we are going specifically how the blockchain is implemented or applied, basically the technology applied in the financial services. Yeah. So what's the agenda? So the agenda is like, I will give you a little bit of blockchain primer, just a kind of a recap from what you learned from last week. Some of the slides will be there, that Athena used, so it will be easier for you to recognize. Then I will directly move directly to the topic of real world applications in finance, where I will kind of do a deep dive on different topics which are relevant in the finance industry, because blockchain has multiple applications in public sector and also supply chain or manufacturing. But here the focus is on finance. So I will give you real world applications, and you will see, how blockchain technology actually, helps, to bring innovation in the fintech industry. But of course, it is like not a smooth ride. There are some challenges and some considerations, and that will be a practical advice for you, so that whenever you think of any idea or you want to work on certain type of product, or if you want to work on some kind of a bigger project, national level, a public sector or private sector project, some of these challenges you need to take it into consideration. These are coming from my own personal experience from last 6 years, but also from the experience of implementing certain use cases. And those use cases will be presenting in the case studies part. Okay. And then I will end this session with the current industry trends and opportunities. Well, you will actually again see those applications, see which applications are actually touching the soul of the time. The Germans call it Zeitgeist. So it's like how where these entire, the market is moving, what is the market dynamic, that you will understand in the fifth topic. So just to start, not sure if you have read about it, because there are so many articles about what works in blockchain. Sometimes people get confused. Crypto is blockchain and everything related to crypto, but blockchain has been applied in other industries. Some of the biggest industries are into trade finance, that we will also discuss extensively today. And in this trade finance industry, we have seen a lot of failures recently. So there were like big consortia solutions, $1 billion were invested, but they found out that it was not, it couldn't be scaled further. So that's So we've seen a lot of failures in the blockchain space in recently when you look at some of the recent news from 2022 and 23. But don't forget, there are other news too, right? For example, you've seen the failures of many exchanges for cryptos and digital assets. The biggest being, FTX, but there were also some other projects like Celsius, Voyager, BlockFi. They all registered for bankruptcy. But it was not only blockchain, but even the traditional finance industry was affected by it. If you look at the bankruptcy of banks, it's something which sometimes inconceivable, but which was a usual thing in at the end of 19th century. But we haven't seen that for a long time. But some big banks like Silicon Valley Bank, Silvergate, Insignature, First Republic were going through their bankruptcy. And they were actually involved also in crypto or blockchain space too. So people were just thinking, is blockchain technology just a passing fad? And does it have a substance or not? And does it have any use at all in a financial industry? So let me show you how this entire, if you call it a fad or hype or interest or trend, how it entirely evolved. So Gartner actually publishes so-called hype cycle. So when you look at the hype cycle from 2015, blockchain was never mentioned. There were many other technologies that you can think of here, but blockchain was never mentioned. Only cryptocurrencies and cryptocurrency exchanges were mentioned in the hype cycle. In this hype cycle, I'm not sure if some of you are aware of it. It shows you how certain things, the innovation is triggered when it peaks, and then it starts to, gets its maturity and become like a standard over the time. So this hype cycle, it goes very fast, this innovation stage where a lot of investment is done in certain technologies. And over the time, it matures over time with some failures in between. So this hype cycle had these, never mentioned of blockchain in 2015. Then came in 2019, they actually created a specific hype cycle only for blockchain related businesses. It involved everything. They just put all the buzzwords in blockchain you can think of: smart contracts, consortia, the consensus mechanism, decentralized autonomous organization, anything you can think of, what you have heard from news, and it becomes like a vocabulary or buzzword. It became like a standard in this, so they created a special hype cycle just for all those blockchain buzzwords. And now if you go further in 2021, you will see it is getting rationalized. So there was no idea about blockchain, only cryptocurrency. Then suddenly they had too many things because there was a lot of interest about it on the topic. 2018, 19, you've seen the crypto crash also during that time. And over the time, the technology is maturing. It's not only the curve is maturing, where it is saying the technology is moving, but they started filtering out all those noises that we have, those buzzwords. And now it started getting its own form. So some of the topics which are relevant for today's sessions, like tokenization, stable coins, decentralized finance, all those things became relevant now because they actually had a definition. Those were not just the words, but actual definitions. They got definition, they got identity, they got acceptance in the industry over the time. And that was the latest, the blockchain, the hype cycle they had released in 2022. From this year, it hasn't been released yet, where it goes into some buzzwords, but they are taken as industry standards like Web3, Oracles, Layer 2 blockchains, and of course, DeFi and stablecoin tokenizations are there. And you see these things are getting, they are getting matured in the technology. So in the latest, hype cycle, I would think of having them somewhere here, where when they reach at this stage, they will become like, kind of like a so-called slope of enlightenment. and they become a standard in the industry. So the blockchain is not a fad. Okay, it's not a fad. It's actual. There is an interest. There's something new coming up. People didn't have any idea how to call it. They call it blockchain. Just as an anecdote, blockchain was never mentioned in the paper of Bitcoin. So it just that concept took its shape over time. And this hype cycle shows how even the agency like reading here, the intelligence agency like Gartner actually had difficulty defining it, and now over the time it's getting its form. Okay, and most of these terms are in the fintech or finance industry that we will be covering today. So just to give you an idea of what is the blockchain adoption timeline that we take it as industry standards, is about like in 2015 time, it was more like an exploration and there were a lot of investment going in. During 2016 to 17, people started, they were like many early adopters. They were starting, trying out many ideas, ICOs, some kind of crazy stable coins. There were many scams also there during that time. But then over the time, it saw its growth, in this adoption level. People got awareness through crypto, but blockchain in itself got also acceptance in other industry where they started taking it seriously. And we hope and we think that in by 2025 it will reach its maturity, where blockchain will become the standard for many financial products in the future. Yeah. So just before I start, something like a small talk before I get started. So a little bit about me. I'm working with the Settlement as a senior business manager and solution architect based out of Tokyo. Previously, I was working out of Germany in Stuttgart. I worked in blockchain industry for roughly 6 to 7 years. I started working with Ethereum and Hyperledger Fabric, but also I use, it's not a blockchain, it's called another DLT, distributed ledger technology called Corda. So I had been working on those different technologies, but blockchain was primarily my focus. By education, I'm a scientist. I studied astrophysics, but I made a switch to fintech around 12 years ago. So I hope to entertain you with, and give you some more insight into the applications of blockchain industry, a blockchain application in financial sector. So before I start with actual presentation, let me ask you 3 questions. Don't answer it immediately. Keep it to yourself, okay? And we will revisit those questions at the end of this session. The first question is blockchain and cryptocurrency the same thing? Okay, just take your time and then write down somewhere or keep it in your mind. Second question, is blockchain technology limited to payments only? Okay, just simple yes or no answer. That's all. And the third part, do you need cryptocurrency to build financial applications on blockchain? It's kind of tricky. Okay, so let's start with the first module, blockchain primer. I know many of you already had a from my wonderful colleague Athena a session on introduction to blockchain last week. So let me go through some of the slides and give you like an overview, maybe a kind of a recap for you. So what is a blockchain? Blockchain, in short, is a shared ledger that can record transactions between multiple parties, which can be verified in an immutable way. So it's a shared ledger where it records, all the transactions. It's a ledger. Okay? It's not a database. It's a shared ledger. It's a record transaction between multiple parties, which can be verified, and they are saved also immutable way. That means no one can manipulate it. Okay. So what are the key features of blockchain? So one is the first one is the distributed network of ledgers. So there is not a single ledger that someone is keeping and everyone is referring to, because that ledger someone has to manage it, right? Someone has to pay for that resources to manage that ledger. And so it's in a centralized ledger, like in a bank, you trust the bank is keeping its GL, they call it also. The bank is keeping its own the data in an accurate manner. And of course, I mean, there have been many scandals about, record keeping. It's not the best way to keep the information at one place. So the technology that alternatively could help, I mean, is a distributed ledger technology. Okay, in the sense, the copy of the ledger is kept among multiple parties, and they're always in sync. So that is one of the one of the features of blockchain, where it puts decentralization at its core in a distributed manner. So that's why blockchain can be called as a decentralized ledger technology, distributed ledger technology. And in this, what it means is that it keeps the copy of the same ledger at multiple parties. So you don't have to rely on the authenticity on one particular party. Okay. And of course, it creates its another advantages. So a single point of failure can also be avoided. If the node A in this case is not accessible, you can still update your ledger or query your ledger from other nodes as well. Second part is the verifiability. So everything on blockchain you keep it's verifiable, because everything is kept immutably. I will tell you how, but it is verifiable because every transaction, every information that is kept there, it needs to be signed, has to be signed. So it uses so-called public-private key infrastructure. That means, I think you had that session last week, but just to give an idea, private key is more like a password, and public key is something that is, identity outside. So your email and password can be, thought of it this way. But in this case, private key is not a password in the sense that, it's not something memorable. It's a very large number. So you need some kind of custody solution. But the idea is that you use this custody solution, use this private key to sign each and every information. That means whenever someone does that changes to the ledger, it is recorded who did it. And it makes it easy. And also, coming to the third point, also traceable. Okay. So you can always trace with that particular signature who put that transaction on blockchain using that private public key infrastructure. But any information that is kept there is kept using so-called hash function. My colleague gave wonderful example with a pancake. So basically, whatever input data you have, you create a hash of it, but you cannot get the actual data back from the hash. But that means any changes you make to the input data, the hash changes, right? So any consistency in sugar or flour or water or eggs that you add in pancake will look different or taste different, right? The same way here, that the hash function is used to create a transparency in the sense, with the signature it's traceable. With the hash function, you know that everything is immutable, because any changes you do and try to match it, you will get a different hash. So you know that any information which is outside, which doesn't have, whose hash doesn't match something on blockchain, it's a wrong information. So blockchain helps you using a hash mechanism, transparency, but together with the private and public infrastructure, it allows you also traceability. And of course, consensus. All the needs to be at needs to have the same level layer of ledger. So in that case, the consensus is a very important mechanism, which is also at core of the blockchain technology. And the fifth is the last but most important part, is programmability. So what it does, it helps you to create a smart contract or automated business logic which executes itself when you call it. And this logic can be viewed by anyone, can be executed by anyone. What it makes it easy for you to manage your whatever interaction you are having with blockchain. And it's not like the one rule is only for one party and another rule is for another party. A smart contract actually creates a kind of a smart way of creating a contract between all the parties involved, all the players involved. That makes so these are like 5 key features of blockchain which are very important. I would suggest you to spend some time. Some of them could be tricky to understand because there's some of them are technical nature, but I would recommend you to spend some time to understand it properly. So in short, on a like a business level, what are the capabilities of blockchain which are actually useful for finance industry? One is a shared database, that you have a shared ledger that you can, everything is recorded, it's immutable, it's verifiable. That's amazing thing about the blockchain. Another thing is, of course, immutability. No one can manipulate the data, no data scandals, no mismatching Excel file or manipulation of funds or anything. Nothing can be tampered with, whatever is on blockchain. And the third part, blockchain allows you to create a cross-party rules, which are not a legal contract, but they create a kind of a trust layer between parties which don't trust each other, for example. So blockchain enables kind of creating a trust among parties when they don't trust each other. So this because you don't need a third person, you don't need a middleman to do certain things. You just put it into programmable cross-party rules in a smart contract format, and you can execute it. So these are the things that makes these are the capabilities of blockchain which are quite important in when it comes to developing financial applications. Like I remember that, like, I saw a lecture from one professor back then in 2015 or something. He's from scientist, but what he said that blockchain is a very interesting technology because it brings three distinct fields together. Cryptography was more about mathematics, computer science, which came also from mathematics, but mostly went into applied part, and the economics. So blockchain is more, can be considered as a marriage of technologies from three different fields. Yeah. So to be precise, what is a blockchain again? So blockchain is a technology for decentralized storage and a decentralized consensus mechanism enabling peer-to-peer transaction, distributed nature, according to predefined rules, smart contracts, without the need to trust third party to enforce the rules and provide trust in the enforcement of those rules. Yeah. That's a quick introduction, maybe a little longer than I expected. I hope that you had some kind of recap what blockchain is about. Let's see how the blockchain is applied in the finance industry. The first and foremost thing that I would like to talk to you is about the digital asset. Digital asset, okay? What is a digital asset? It's a digital unit that is allocated in the distributed ledger address, which can represent any tangible or intangible asset. Okay? So intangible object. So tangible, house, a car, cash, land, or intangible, like intellectual property, patents, copyrights, branding, some kind of trademark. So all these things can be considered as a digital asset, when you define it into a particular digital unit. What makes blockchain interesting is some of the capabilities of blockchain make this digital asset easy to verify for the ownership. Its attributes, it's immutable. That means no one can change its attribute without enforcing certain kind of smart contracts. It is always auditable. So you can see who was owning that asset yesterday, day before yesterday, last year, last to last year, And any transaction you do are irrevocable for the digital asset. So any changes you make about the ownership, about the attributes, they're irrevocable. So when you say that, okay, I owe you $30 and you make it, oh, I change it to I owe you, I think, $33. So both things are recorded on blockchain. And the latest state tell you, yes, I owe you $33. So these kind of transactions, whatever you do, are irrevocable. And what dollars? Dollars are basically in a digital, if you consider as a digital unit, would be digital asset. So what are the typical digital assets? The most popular digital asset that is a cryptocurrency. All those tokens or coins that you hear of are actually a digital asset in blockchain. So blockchain keeps a record that there are digital assets and who owns it and anything related to that, any attributes about the digital asset. That's all. For example, it can you can have like 20 loyalty points, 2 million loyalty points on blockchain, and you can distribute based on how the person is interacting. So a particular person will have 30 loyalty points, the other one 60 loyalty points, third one 50 loyalty points. Those loyalty points can be a cryptocurrency. So you can issue those things. So those are digital assets. You issue it, but in the sense, you're not issuing or printing it. you are creating a record of it on blockchain and you show who is the owner of it. The same way, other digital assets which are popular are the utility tokens. When you look at Ethereum, Ether is not necessarily a cryptocurrency in a pure form of definition. It's more like a utility token. Ether was created to facilitate a mechanism which is like a decentralized computer for Ethereum-based blockchain. So Ether is a utility token. But if you look at Bitcoin, because Bitcoin blockchain is only for monetary transaction of Bitcoin, then it's a cryptocurrency. It's not a utility. You cannot use Bitcoin to do something on Bitcoin blockchain, but you can use Ether to change the ownership because you have to pay so-called gas fees, right? So when you deal with the crypto, then you may have heard of this concept called gas fees that you have to pay. So those are paid in Ether. So Ether is more like a utility token, but in some way, people also trade it as a cryptocurrency. Another one is e-money token. Of course, the Libra, the project is there, but e-money token we have done with one Belgian bank, it's a Katecoin. So it was like you can create a digital copy of your dollars, of your euro. So either they could be an e-money token. It's a very specific definition to it. I will come to that. Or it could be a stable coin. Stable coin has a very different definition. Okay. So we'll talk about those e-money token and stable coin because we'll touch that topic. But for now, you can see all these things, anything that can be quantified as a digital unit is a digital asset, but digital asset is not only limited to these kind of coins, which are like dollars, which are divisible. There is something called, NFT. And what is an NFT? NFT is identity of something where you cannot divide it into small pieces easily. I mean, in the sense, it's not like I give you $1 and you give me $1. It's of the same value. But if I give you a painting of Mona Lisa and you give me the painting of Monet, it's of different value. So some of these things, they have their one identity, unique value to it. So those are called non-fungible token. The one like Bitcoin or Ether or other cryptocurrencies are fungible token. And there are also other digital assets where it has its own unique identity. It's only one identity to it. Your ID, your passport is your, if you digitalize it and put it in as a digital asset on blockchain, will become NFT. Your house has the address, the area, the registration number with the land registry. So it has those attributes. So that house is a digital asset. So if you put it in blockchain, the same thing. If I go into gaming, there are like a lot of applications about it, or collectibles. If I buy some kind of like old Dodger or some like old car, someone famous celebrity used it, its value is high. I mean, I was just watching that like Jay-Z, the rock, the rapper, and his car was sold for $500,000. I mean, it's a simple car, but he owned it. So it became collectible for someone. So if someone wants to own that on a blockchain and do easy trading, it's called, then it is called NFT, and that becomes a collectible. So those things, if you record it on blockchain and attach to the physical world, it's called phygital token. So those things can also be a digital asset. So these are quite interesting use cases that people came up with. But what people do with the digital asset? I mean, I say, okay, my cup of coffee could be a digital asset, right? So, but who's interested? I mean, after, I finish my coffee, who would like to buy it, So basically, it doesn't make sense for each and everything to create a digital asset and create a record of it. But there are certain things like painting from Monet or Goya, or real estate in Riyadh or in Dubai, or financial securities, like loan or bonds of particular company, or even the event tickets, football tickets. It's so difficult to get football World Cup tickets, So you can imagine those tickets can be also digitalized, for like cars, expensive cars, or some precious stones. So there is a process of bringing these assets from real world or some real use cases on blockchain. And this process is called asset tokenization. Okay, and this is very I mean, it's being used in finance industry a lot, because finance industry is all about financial assets, right? Real estate, your apartment, your house is also financial asset, just like your securities, that you buy some shares of the company or bonds of certain company, or even if you own some kind of collectibles, or even your exclusive VIP access to a World Cup football final ticket. So that can be tokenized. There are multiple ways to tokenize it. So one of these, like verification, ownership over the asset, and you create the tokenization. You create tokenization engine in a smart contract format, and you bring it to them. You bring it to blockchain. So this is how it can be done, and there are different names to it: ITO, STO, IDO, different ways of tokenizing the assets. And this is one of the use cases which is used quite extensively in blockchain. I mean, right now there's a buzz about this RWA, they call it. It's called real world assets. Basically, the same thing, the bonds and customers, everything. And there are people create like different type of tokenizing mechanism. This one is from the Chainlink. And they have so-called Chainlink proof of reserve. And based on that, they say that, hey, let's tokenize it, and you can use it for cases like in a decentralized finance, which I will touch shortly. So what brings the benefits of tokenization? It's like one big application in blockchain industry, use of blockchain in the finance industry, that it makes it easy to bring these real world assets in a tokenized format to a blockchain. And since blockchain is, keeps an immutable record, it's traceable, the ownership can be changed at a very limited cost. What it does, it actually takes away all the complexity of managing those assets in real time. Just imagine someone bought a like collectible painting, from Monet, and wants to share the ownership, send the ownership to someone else. It's a very difficult process. So what it does with through token, by means of tokenization, you can make it more efficient. It makes it the market also liquid, so you can own the asset, you can sell it, you can lend it, you can make it as a collateral, which makes it easy. If I have a painting of Monet, and if I want to collateralize it because it costs $50 million, I cannot go to, because I need some very valuer, I need a lot of processes, the lawyers, the signatures and everything, until that it needs a custody where the painting can be kept. But what about if I just put it on blockchain, where make the collateralization also makes it easy? And the other thing is like transparency and accessibility. I mean, many parties can access this kind of digital assets and see how they can be utilized. So this digital asset tokenization is a very, very useful case that, it's a very useful application in blockchain space. Next one is trade finance. Trade finance, you must have heard of it a lot. It's it's about like letter of credit is one of the instrument. We did that actually with the India Central Bank, Reserve Bank of India, one project. So the idea is like when importer and exporter, they want to exchange good for the for cash, dollar or any other currencies, how they do that. And the trade finance, they looks easy. One bank actually issues a kind of a letter of credit. I say, I guarantee that this payment will be done and the goods is delivered, and then the seller actually gets from the buyer, this letter of credit goes to the bank, and you redeem it. Looks very easy, but it's not that easy. So what happens that in reality, you have a lot of players in between. This process looks quite easy. I'm selling to someone is buying it from me. I'm using my bank, that person is using his or her bank, and we're trying to do a transaction based on the trust that they created between themselves and me with my bank. But it involves a lot of things before the payment can be released. That there's a lot of documents about importer, exporter, from the bank side, the freight forwarder, the insurer of that particular shipment, and there are like a lot of custom laws and documentation that needs to be done. So the trade finance is a very interesting use case where you can connect all these dots, because everyone is sharing same level of information using so-called blockchain, let's say trade finance platform, where all these parties have access to it, even the inspection company and freight carrier, and you can make this process easier. And there are a lot of examples of some where where some of the payments used to take like 90 days or 180 days to be cleared. They cleared in a less than a week time, because most of the information was shared on a shared ledger, shared database that they had. So trade finance is one of the sector which sometimes people overlook, but considering in the MEA region, for example, Dubai port is one of the biggest port in the world, and also the Neom city coming up. So those kind of use cases, if can be applied in those areas where you take away the complexity of the entire process and makes it easy with a single ledger, but everyone has a copy of it, so you know that it's not manipulated. It is a very interesting use case, and we did one POC with the India's Reserve Bank of India, the India Central Bank, and we have seen a lot of good results to it. Hopefully it goes to the next level where multiple parties are involved, but that POC was done with the 3 different banks. So what it does, when you look at it, what are the benefits of bringing blockchain in trade finance? In a traditional model, you have a very high transaction settlement time. Like I told you, a lot of documentation is needed. There is a need of extra banks in between, because I just give you a simple example with the importer and exporter bank. There's a huge transaction cost. Every transaction that you do, it costs, someone takes a fees for it, right? And there's a lot of frauds that's happening because the records are not kept in a clean manner, and mode of confirmation is always manual, and it takes some time, months to get the things. With the blockchain, you can solve this problem. Transaction settlement time is low or almost to zero. Documentation, everything is at one place. It's it's completely reconciled, so you don't have to worry about it. There is no need for extra banks. Everything can be done directly on blockchain, so you don't need extra trustee bank for it. And of course, the transaction cost is low here. The fraud is non-existent because of the nature of blockchain, the immutability. Yeah. So trade finance is a very good example where a blockchain has been applied quite extensively, has been tried at many levels. There were many failures too, because people learned from it and they improved upon it too. Next topic is about cross-border payments. I think your this session is about fintech industry, so this is like the topic that many people love. So typical cross-border transaction involves, in an ideal way, if you use Swift, it involves basically a correspondent banking model. So in this case, you see that sometimes for the payer here, the foreign exchange is not clear, what are the transaction fee is not clear. It's been improved between 2 countries on certain type of remittance or cross-border payments, but in many countries you see that a lot of those issues, and even if I do the payment now, sometimes they arrive next week after 6 days. The settlement time is different. Everything is unclear. There's so much lack of information on this side. So this is one example how the payer, the Japanese car company, is paying to Mexican car parts company for the car parts. And entire flow, you see that a lot of hitches that they have to go through for the cross-border payments. Cross-border, but these can be enhanced, so there is a paper from BIS, Bank of International Settlements, where they explain multiple ways how it can be improved, and there are like multiple mechanisms they could use. What are the metrics that they should take into account while improving this cross-border payments process? But we found blockchain, there are multiple ways to do it. Of course, in fintech industry, there are many innovative companies coming up with their existing, using existing payment rails, and creating a cheaper model or efficient model around it. But there is with the blockchain has intrinsically the incentive to streamline this process, because blockchain was created for transfer of monetary value, right? Bitcoin. And over the time, it evolved into like a decentralized computer when we talk about Ethereum-based blockchain or even advanced blockchain. So in this case, we can say that this SWIFT transaction with the correspondent bank relationship and blah, blah, blah can be replaced with blockchain altogether. So this blockchain-based, transaction can can reduce the cost and makes the transaction instant also. So there is one product like Ripple. Ripple has been there since 2012. It's another blockchain ledger technology. So what it does exactly the same thing. It uses the XRP ledger, the blockchain ledger, where many financial institutions are connected, and it enables, transaction alternative to SWIFT, a transaction which is very cheap, and instantaneous also in some cases. So how it did it? I mean, if you look at this diagram, you will see that in a traditional current system, if you look at the cost involved, like foreign exchange, currency hedging, liquidity, treasury operation, in traditional systems, the cost is extremely high. If you use Ripple's existing technology, which is a fintech innovation, it's not necessarily a blockchain, it's a fintech innovation that they did. They reduce the cost by 33%. But if you use their blockchain ledger that they have as one of the main products, you can reduce the cost by around 42%. So this cross-border transaction can be done at less than, with the optimization of 42%, which makes the transaction much easier, to do. The interesting thing is these kind of cross-border payments are like backbone of many things. Also the trade finance that we have seen, but also remittance business, because many migrant workers work in different countries and they send the money back, and they have to deal with a lot of these problems. Because sometimes I've seen some cases where like sending money to Ghana or Tanzania can cost of 12% of their value that they're sending. That's a lot of money for the people in Ghana, right? So basically those things can be improved using blockchain and using some of those blockchain technology components. But in this blockchain technology, I give you an example of Ripple, how they did it, okay? But there are also many other examples how you can do it, because it's becoming popular now. So let me, I talked about this blockchain-based remittances with Ripple. Cryptocurrency to cryptocurrency payments are also popular in South America. But I think more interesting for the MEA region, Middle East Africa region, is the stable coin and CBDCs. So let's talk about how you can use a different type of concept, like a different type of digital asset, stable coin, or central bank digital currencies to enable the cross-border payments. So what are these things? So stable coin in a simple term is a combination of fiat currency and cryptocurrency. Okay, so basically it gives you the identity of the fiat currency, dollar, euro, Japanese yen, whatever you have, but in a cryptocurrency, but also the flexibility, transparency, trackability, low fees transactions, and cross-border access, that flexibility that you have with the cryptocurrency. So the stable coin can be thought of like the combination of both of these things. So what type of stable coins are there in the market? So stable coin, the most popular, USDT or USDC. So they are like roughly like four different type of stable coins. One is a fiat backed. That means you keep like 10,000 euro in your account and you issue 10,000 as a stable coin on blockchain. So there is just like with the real world asset, in the sense you have real world cash and you back it up with those stable coins. So those kind of fiat backed stable coins are there. There are also commodity backed stable coins like gold. People keep gold reserve and say that gold reserve has certain value. There is some kind of risk management calculation behind it, but you can issue, like, let's say I guarantee that gold price won't go below 20%, so I can get up to 80% value of the gold at this moment. I will issue it as a stable coin. So there are many such commodity based stable coins in the market. There are also like crypto backed stable coin. So cryptocurrency has its own value, so the people create a basket of different cryptocurrency and they say, I have that somewhere in asset. Mostly people take Bitcoin or Ripple or Ether as a back cryptocurrency, and they can issue a stable coin for that. And third one is more like algorithmic stable coin. Algorithmic stablecoin is a different subject because it had its bad name because of the implosion of Terra Luna, if you heard of it as a cryptocurrency, where they created a stablecoin just for this for Terra Luna blockchain, and it was algorithmically created and it had its own limitation. But the most popular in the market right now, it's a fiat-backed stablecoin or commodity-backed stablecoins. The good thing is in Asia Pacific region, Japan and Singapore has created a very specific policy how to create a stable coin. There are certain rules, that needs to be complied, because if you have one-to-one, not an issue like fiat backed, but most of the stable coins, they try to play with some kind of, financial assets or some kind of commodities. So there are certain rules already given by the government. So stable coin is creating, getting a lot of traction in the market. Okay, and they are being used mostly for trading purposes for now, but I see that those stable coins could be used more in the retail space. You have heard of news from PayPal. They are planning to issue their own stable coin, the copy of the US dollar, and PayPal is the payment company, right? So I think that will get an acceptance, and stablecoin are used for remittance business. If you look at this like community-based stablecoin like USDC, so it has a little centralized model, but those stablecoin are used for remittances to send money back to, for example, Argentina. You know that Argentina right now has a problem with the hyperinflation, and it's in economic turmoil. So people are using dollar as a safe currency, and they are using most of the time also USDC, a stable coin, to do certain type of payments because they trust their dollar, the US dollar, the stable coin, more than their own currency, peso. So stable coin is can become a geopolitical factor in long term, but it is creating a lot of innovation in the market. So stablecoin is one of the great blockchain application that we could use in a financial sector. Okay, so about the stablecoin, just to compare with the traditional cryptocurrencies, volatility is low because it's always pegged to the actual dollar. So you don't have to worry about those other, volatility. Monetary policies are aligned with the fiat currency policy because it's the USDT. That means it's whatever the policies created for US dollar are actually applied to that. So those are the things that make stablecoin a good choice for payment, application. And it's not only for cross-border payments. They are used also for, decentralized apps as a store of value, a synthetic gold, for lending purposes, and as medium of exchange, of course, like in case of Argentina, and performance measurement. There are many things people are experimenting with the stable coin. Other thing that is interesting is the CBDC. Now, CBDC is a central bank digital currency. So what's that? So normally a central bank doesn't give you a cash. Okay, what it does, it creates a reserve and maybe prints a cash, of course, for that real money, but it gives to the bank, and bank actually becomes like a service provider, or gives you access to this whatever reserve that central bank created as a real money. What it does with the CBDC, the idea is, since it is a central bank digital currency, the idea is that it actually gives cash directly to the user. So it actually issuing a currency which is directly going to the user, and banks model will more likely to be a service model where banks will provide lending, other kind of payment services or something like that, maybe a mobile wallet app or something. Looks nice, looks very interesting concept, because central bank anyway, they have the authority of creating fiat currency. Why not put it in a digital format? Yeah. But it's not easy to do that, because if central bank gets involved with the retail part of the transaction, it can create multiple kind of frictions in the policy, because they have to do some choices. What about the banks? If they are just left to do the services, is it enough? Because the banks are needed as an intermediary in many cases too, because they are a sole holder of many financial instruments. So there are quite a few CBDC models that came up with. So one thing that I just showed you is a direct CBDC. There is indirect CBDC, which is quite popular in India and also in many other CBDC projects, that they actually involve some commercial banks. So bank actually issues those CBDC, digital, central bank digital currencies, digital assets, to them. The central bank manages together with the commercial bank a ledger, a blockchain, where those CBDC digital assets are issued as a currency, and these banks facilitate services and distribution of those digital assets to the to the retailer like or merchants. There's a hybrid model where they would actually use also not only the banks but payment service providers like PayPal or Alipay, or in Japan PayPay. So those things people are experimenting when it comes to CBDC, how that can be implemented. The direct CBDC model is a very simplified model, but there are multiple implementation in the space. So basically the same idea to solve the problem of payments and transactions, they are coming up with a kind of stable coin, which is not in the hands of central bank, and something that central bank controls, that they don't want to lose, on the innovative part of the blockchain that it brings to the table. They said, okay, let's get involved and we will issue our own currency rather than someone else doing it with some kind of fiat or asset-backed securities. Yeah. So actually, when to make it short, just imagine that what is a CBDC when you look at this electronic way of doing payments, universal accessibility of those, the cash and the payment industry, and the liability that central bank has. If they directly deal with the people, it's mostly like a cash. If they deal with the banks, which provides electronic services or payment service providers, those will be in the form of reserves. And if those banks or payment service provider directly dealing with the people, it will be more like a bank account or some kind of wallets or cryptocurrencies. But with the CBDC, it is covering all those things: the commercial banks, the general public, and the bank's own responsibility. Yeah. So CBDC is a very interesting model, very interesting model to look at. Now, looking at this part, we were talking about, let's go to the last part. I would say it's like a DeFi, decentralized finance. So decentralized finance is it's interesting because now we've seen that with the blockchain allows you to get rid of all the middlemen. So centralized finance, you have mostly like one particular bank or company, or like a PayPal or Visa or MasterCard network. They're managing everything. With the blockchain, you don't have to worry about it. So the idea behind it is to to create a protocol like a smart contract, which is doing everything and everyone has access to it, rather than one company like a PayPal managing everything on their own. So the people are going away from centralization to decentralization. And that's where the DeFi comes in. DeFi comes in many decentralized finance without central bank, without PayPal and all those things in a different form. So one of them is a stable, like many applications are there, like stable coin that we just discussed. Other one is the exchanges. So you know that I told you about FTX went bust and many other exchanges went, but like Celsius also. So the idea is like those were crypto exchanges, but centralized way. They were done it centralized way. They had their own simple databases. They were not doing anything on blockchain. So there is a concept of decentralized exchange, okay, that are like Uniswap. They are popular, where you run everything on smart contract, and you create exchange of trading. You enable trading directly through smart contracts rather than some one company managing entire infrastructure. That's where decentralized finance is also going. It is also allowing a P2P trade lending. So one person he's in need of a cash, other person can provide it. We did one project in Bahrain where we use cryptocurrencies, and we created a so-called decentralized autonomous organization to fund some social project. So someone wants to build a school, can get a donation from a bunch of people, like crowdfunding, using these kind of products. Yeah. So this was complete DeFi because someone was posting the project, other way were just like evaluating the project and decided to donate it. So it's a completely decentralized because everything was running on smart contract, not on the platform. So even though they had a beautiful UI, the idea was that anyone can just run the smart contract and create their own project and also contribute towards it. Of course, if you go into derivative market, the DeFi has also created a lot of opportunity because you do a lot of automation with the smart contract. Yeah. Other one is the insurance industry. There are many, instant settlement of certain things, instant, changes in the insurance premium, and all those things can be managed using a smart contract. So decentralized finance is creating a lot of opportunity. And of course, asset management. You want to, for whatever asset that you have, your house, your anything, you want to digitalize it and earn money over it, right? So this is it's creating many interesting portfolio management projects, products based out of the smart contract. Yeah. So there's like many applications that can be done, but it's not an easy thing, in blockchain. Blockchain has a very big problem. It's called blockchain trilemma. So it has a problem. It cannot have all those three things: decentralization, security, and scalability. Most of the time, there are some solutions for security and decentralization, how they solve it. Scalability was a very big issue for a long time. And because Ethereum transaction can do only certain number of transactions per second, so like 7 transactions per second, which was very small for executing a lot of those financial, because finance industry sends a lot of transactions, they need to manage that. So people started coming with different solutions. They're like L2 solutions, they call it, or they created completely another blockchain protocol. So there are still attempts to solve. There is no holy grail. You need to there will be some kind of trade-off between these three things, but industry is moving and creating the standards around it. Another problem with the blockchain in finance industry that I've seen is about it's of 4 different nature: technical, legal, organizational, business. Because on legal matter, compliance and everything needs to be there. So you need to write a smart contract or create a process which is compliant with the law and regulation in that particular industry. Technical challenges are there. We have to have enough engineer. We have to have enough understanding how blockchain works in finance industry. The business, okay, because people say, hey, blockchain is nice, let's do it. But then they see they don't see a business value, because sometimes return on investment takes time to take shape. So those kind of things there, because there is no proper business model. So those are the challenges that we have seen with the blockchain. And of course, the organizational one. And what is the organizational challenge? This thing, because there is a reluctance, I mean, basically, it's a new thing. So people think, hey, this thing is working. Why do we need a blockchain? So they're not thinking if the blockchain brings value to them. It's just about the mindset, about something new is there. Should I change it? Because they have 9 to 8 job and they said, okay, I'm getting my pension afterward. Why should I care about it? So those are the things that are there in organization, in many financial organizations. I've spent so much time convincing why, with different arguments, why this technology with this combination works, is the right recipe for your success, and you can create more value to your customers and also to shareholders. So those are the things that needs to be considered when you want to, when you think of like blockchain use cases. When does blockchain make sense? Of course, these are the 7 things that I would. These are like 7 things I would say. You need a shared repository. You need to get rid of intermediaries. You need to manage, digital asset in a finance industry where there you need transparency. You need to create a trust. You have a lot of transaction going in and you want to manage it. This is something you can manage. That's where blockchain makes sense. So there are certain things. You will have this slide. You need to contemplate before you creating a blockchain use case whether blockchain makes sense, because what the organization was saying was not something wrong. Yeah. Well, before going to case studies, I just want to ask Sagar, because we are just touching the time, right? Maybe it was a profound topic. Yeah.
No, Nandan, thank you, Nandan. That was really interesting. I think everyone's staying till the end, so this it's extremely been very useful, very insightful. I just wonder whether we can share these slides afterwards so they can go through the case studies, and maybe we spend a bit of time taking questions, if that's okay.
Perfect. So because I have a lot of case studies with all those challenges, solution, and the impact, so perhaps you can go through it. And it's a lot of things that that needs to be covered, but I guess that helps you a lot. Yeah.
No, amazing. Thank you for this, Nandan. I think it's definitely going to be something which we'll share with everyone, and they've got the recording as well to cover it. I appreciate we are at the hour mark, so if anybody needs to leave, you're more than welcome to leave the session. But Nandan, if you can take a few more minutes, I know it's 1 o'clock in the morning in Japan, but if you take a few minutes just to go through some questions which we have. So I think there's quite a few questions related to stablecoin which have been asked about. So is stablecoin essentially the next evolution in digital in cryptocurrency? So we've seen the sort of the first wave. Is stablecoin the second wave, or are there any challenges to using stablecoins for some of the applications that you mentioned? And then there were some questions related specifically around trade finance and using stablecoin for trade finance.
Yeah. So stable coins normally are in a public chain. So I hope that you're aware of the concept, like there's a private permission chain. So you can create a blockchain just for private parties. And there is also there's also this public chain, the Ethereum that we talk about, Polygon, all those. They have because Ethereum, you can have it as a private chain, also run it on your laptop. But the one that people talk about, Ethereum, it's a public chain with like thousands of people, interacting with it. Stable coin actually resides in the public chain, not in the private chain. When it comes to cross-border transaction, then because this money is available for everyone to access. Ripple example I gave you, it's also public chain. There is a Stellar, it's also public chain. So whatever that stable coin is there in those chains, they're accessible. So there are market makers, there are liquidity providers, there are many players involved, using the stable coin. So you have to fight for it. You have to create a business model around it. You have to create a smart contract around it for those kind of stable coin. And if you look at the maximum number of crypto exchanges, crypto trading that happens using stable coin. It's not Bitcoin, it's not Ethereum. Why? Because when I buy Ethereum, I want to trade it back to USD. People don't trade it to USD in a fiat currency. They trade it to stable coin first, and then use the stable coin to buy another currency. So stablecoin is becoming like an intermediary for many trading practices. So normally, I mean, in real world, I will say I will buy a stock of Amazon, get my USD, and then use that USD to buy a stock of Tesla, for example. Those kind of things. So that's where the stablecoin found its value. But I think over the time, with the PayPal entering the industry and many other companies, stablecoin on public chain will become useful as a where you, with your wallet, you own that stablecoin. You can use it to pay for your coffee or for your drinks or for your dinner or lunches or anything. So that's where things are going. Why? Because in Japan and in APAC region in general, government has created a policy how the stablecoin should be. So stablecoin are nothing but a simple cryptocurrency, but with certain limitations to it that they want to have. If those limitations are there, you can use it as a currency. So it will be a proxy for fiat currency in the public chain. In trade finance, it is different. Yes.
Thank you, Nandan. And it just follows on to another question which we've had related to the relationship between CBDC and stablecoin. So is CBDC a form of a stablecoin issued by the central bank?
In one way, yes. In other way, no. Because it's issued currency, of course, it is backed by something, but it is backed by central bank's promises, not by the actual currency. Because in case of stablecoin, if you say fiat-backed stablecoin, then you have $10,000 in cash, which has already been issued by central bank, and you convert it into stablecoin. You keep it as a reserve somewhere, as a collateral. But in CBDC, central bank creates new currency, which is not there in the market. So that's where the difference comes in. Okay. One thing to note, CBDC doesn't need blockchain. Okay. There's a misconception that CBDC will only work with blockchain. You don't need it. Blockchain brings value because they are bringing other parties together. Cross-border CBDC, for example, where multiple countries and law firms, market makers are involved, or maybe the commercial banks in the case of internal CBDC project, retail CBDC project. That's where the blockchain comes in. Stablecoin needs intrinsically blockchain to work because it's a digital asset on ledger. CBDC is not necessarily a digital asset on ledger. You can have it also in a simple database too.
Great, thank you, Nandan. And bringing this back to Saudi, so there's a few questions here related to which of these use cases or use cases have you seen, particularly in Saudi? What does the regulatory environment look like in Saudi for the use of blockchain? So is there any comments you can provide on that?
Yes, so we've seen that like a lot of interest in Saudi because Saudi did like 4 pilots, if I'm not wrong, in CBDC. So there is a lot of traction, and Saudi is also creating cross-border, arrangement with UAE, China, and also India. Since it's one of the biggest exporter of oil, that makes sense. So maybe CBDC in the form of wholesale CBDC, which is there between intergovernmental, a cross-border transaction could be used. So I see that a lot of potential there. But Saudi is also a very nascent market when it comes to payments. So, it's creating a lot of innovative payment solution. So you can use a traditional financial system. You saw the cost involved in it. You can optimize it, you can reduce the cost, but maybe bringing the stable coin in it maybe can increase the value, and make those stable coin interoperable between different payment service providers. So that's where I could see opportunity. But I think like Saudi Central Bank is more interested in CBDC, how to bring it as a retail customer. That would be that is something good to watch first, yeah. Because because on CBDC level, government level efforts are very important. Stablecoin, anyone can do it. Even I can go today, write a smart contract and issue, Saudi riyal. I mean, it's very easy, but it needs to be backed by something. So I need to create a trust. I need to have some. So those policies are not there yet, but will come eventually. Yeah.
Great, thank you, Nandan. Had you been asked about the questions you had at the beginning, if we could go to the answers for those questions, the yes and no
Sure,
questions,
sure.
so we could cover those off. I think some people have been asking what are the answers to those.
Okay. So first of all, just give you for the CBDC part, you see that it's a latest graph, so it's getting a lot of traction. So I think you will have a slide to have something to look at. So the answers are: is the blockchain and cryptocurrency the same thing? No. Blockchain is a technology which drives cryptocurrency, but it's not the same thing. Is blockchain technology limited to payments only? No. You see that. It can be used for documents management, trust management, creating immutable record of certain things, collectible management. So it's not limited only to payments. You can use it for, banks are using for trade finance. It's not only about money transfer. It's a letter of credit management, the documents management, everything can be done on blockchain. And the last part, do you need cryptocurrency to build financial applications on blockchain? No. All these applications, I mean, you will see in the use cases, all those use cases application, there was not a single time we use cryptocurrency. So all those blockchain, you don't need cryptocurrency for everything. So blockchain can be used without cryptocurrency as well. Yeah.
Thank you very much. As another, just a final question from our side. We've got a lot of people who want to know more about blockchain. They want to know where to find resources about blockchain. So is there anything which you can point them towards which will help them sort of to learn more and look at different applications?
So basically what I will do when I share the slides, each and every diagram has a reference to it. I would advise everyone to go to the references. There are some PDF files, some the web links where all those things are explained in detail. So learn through those detailed explanation. I know it's a very broad topic. I mean, I could have talked about just about CBDC for 2 hours, right? So that's a right way to go towards it. If you want to learn about like stablecoin, I use mostly, I recommend someone to use investopedia.com. It's like it has a lot of resources, not only for traditional finance, but also for these kind of finance, where it talks about stablecoin, CBDC, and some financial products. Some nice, small videos, 2 minutes video, which will give you a kind of overview. But the topic is very broad. Topic is very broad. You have to find which topic interests you, and you can, you can go to that right slide deck and go to the resources. But feel free to write me email also. I'm available for email, and I think we have a Telegram channel. So just feel free to write me. Hey, I want I want to know how blockchain can be applied for these financial products in this industry. Maybe I can point you to the right references too.
And so just taking a step back, there's a few people here who I guess are looking at studying or starting university. What sort of undergrad or postgrad courses would you suggest someone takes as a foundation if they want to get into blockchain?
So depends. Actually, if you can do economics, that's also fine. The CEO of our company, he studied economics, right? So that is also fine. But if you are from a technical background, I would say have some better understanding of cryptography. So that would help you a lot, along with the computer science, of course. And most of the things, I mean, feel free to use our platform. We have $250 as a credit if you want to code with it. We organize some beta sessions, so you can also look at our website, our documentation for that. So you can also learn, because learning by yourself is good, but there is no textbook answer to it. There is no textbook about getting started with blockchain. There are some textbooks I can refer you in slide deck. Maybe I can mention them, but not textbook at the level of the university. But I would say technical knowledge, go with the cryptography. Business knowledge, start with the economics and understand how money works. Then you will find the right answer. Yeah.
Excellent. Nanda, thank you again for your time today. I appreciate it. It's extremely late. We really appreciate this session. Really appreciate the insights you've given us, and I do look forward to us collaborating. We look forward to seeing you in the kingdom soon as well.
Yes, definitely. My pleasure, and my apologies also that I couldn't cover all the topics, but you will have the slides, and feel free to write me anytime, email, and I will reply back to you with the right answer.
We'll share your details in the Telegram chat for anyone who wants to reply back to you. So thank you again, Nanda, for your time. And thank you everyone else for joining us as well for the week 9 of FinTech Summer Sessions 23. As we mentioned, next week is the last week, week 10. We'll be covering artificial intelligence in financial services. So it's a great session by Jared. Please do join us for that. Please do remember, however, it's going to be on Wednesday, not Tuesday. So we have Seamless on Monday and Tuesday, and I hope to see a lot of you at Seamless next week for us. And it's a great place to learn a lot about fintech. And if you haven't already, we've got a free promo code for anybody who wants to attend. Just type in fintech for the delegation pass, and you get a free promo code. But this session next week will happen on Wednesday, so please do join us for that as well. The only thing to say is have a good evening, and I look forward to seeing you all next week. Thanks again, Nanda.